it is a product that is targeting, that is aiming at protecting people from any risks that happen in the world, right? So why should it be separate? Before I continue, I just want to make a small disclaimer, and it's, I work at the Microinsurance network, and we're going to talk about inclusive insurance. There is this divide, should we call it microinsurance, should we call it inclusive insurance? I would, that's here, it might be a bit controversial sometimes, but it is the same thing, basically. It's just a fashion statement. Microinsurance, people used to call it microinsurance 20 years ago. Now inclusive insurance is much nicer, so that's why we call it like that. I will talk about both as synonyms. So it's, if I say micro, it could be, or inclusive, I'm referring to the same thing. I hope nobody's going to attack me and say, no, inclusive is broader, so you need, there is a small technical difference. To give you a quick overview of inclusive insurance or micro insurance, basically the basic definition is it is insurance that was designed with low-income people in mind. So it's products that were designed for low-income people. So the big question comes now, it's what does it mean, being a low-income person? Where is the limit? Is this person a low-income person or not? Well, when there is regulation, that's easy to solve. Regulators usually define that. At the Microinsurance Network, we define it as someone earning between 2 and 20 international dollars in purchasing power parity. That's a complicated word. So as you can see, $2 to $20 a day is a huge difference. And it brings a lot of people in, and a lot of very diverse people. You cannot really compare someone that earns $2 in one country to someone else that earns $19 somewhere else. So it is a huge, huge bunch of people, and they are all very different. But they all have one thing in common. And the thing that they have in common is that insurers usually don't like them. I'm saying usually because there are some exceptions, but traditional insurers do not like this segment because it is a very difficult segment. It is a tough market, and so they are usually not cared for and they're not protected. Unfortunately, these people are approximately, according to our estimates, it's around 5 billion people are not protected right now. So it's 5 billion people that are either not protected or underprotected. That means they don't have access to any type of insurance or equivalent. But at the same time, they do face the same risks that we all face. They also have health issues. They go to work and might lose everything because of a hurricane. They might have a harvest that doesn't work because of some climatic change, anything that with climatic change. And this is especially true in developing countries where they don't have a social welfare state that protects them. So we have here a contradiction, and it's that usually people that have the means of protecting themselves have more access to insurance than those that don't. Right? So you have, as I said, this big chunk of the global population that has no way of protecting themselves, but at the same time they don't have any income or savings or any way to get back on their feet when something happens. So as I said before, at the Microinsurance Network, we have our estimates, it's 5 billion people, approximately 5 billion people are on or underprotected, which is a very grim outlook, of course, I confess. But at the same time, if you choose to look at the glass half full, it is 5 billion potential new clients. It's 5 billion people that need to be protected, and so it's 5 billion people that potentially could come into the could become clients of anyone that comes up with something interesting. So for us we are a multi-stakeholder organization, so we do not push for any type of product. We are not advocating for this or that type of product, for this or that industry. The only thing that we need to make sure is that we support any initiative that is there to build resilience for low-income communities. And the only thing we ask when anyone develops a product for this community, for any of these people, is they have to be suave. Suave sounds like I like that word. It sounds very smooth. In Spanish, it means soft. But it is actually an acronym that was made from the English, and it stands for simple. So any product needs to be simple. You cannot have 1,000 exclusions that are going to make complicated or difficult to understand. It needs to be understood. So whoever is distributing it must make sure that that the client, that whoever is taking it up, understands what they're purchasing or what they're getting. It needs to be accessible. So the people that are getting the products need to be able to get it easily. It needs to be valuable, of course. I mean, we're talking about low-income families, so the price needs to be, acceptable, and it needs to be efficient. And efficient means that at the moment of the claim, it needs to be quick and easy for everyone. So that sounds pretty straightforward. If you have that, that's it, right? You have an inclusive insurance product, and then you can protect a lot of people. But unfortunately, it's not that easy, because as a first step, you need to understand who your client segment is. As I said, there is a very, very diverse group of people, and you need to concentrate on one of them. You need to identify who you're going to target, what they need, and you need to develop your products around that. In the product development world, there is this mantra that you need to be client-centric, and you need to develop products depending on your clients and all of that. Unfortunately, people don't usually do that, especially in the insurance industry. What usually happens is that insurers simply take products they have and try to adapt them how they can and push them on low-income communities, just by putting the price down, for example. And that doesn't work. You need to understand who your clients are. And after you did that, and which is, I understand it's a very complicated and difficult process, you go to the next step, which is making sure that they understand you. And that's very tough as well. I think that I would even argue that that's even more difficult. Insurance is a very complicated concept to understand for anyone. Why would you pay for something you actually don't want to use? Nobody wants to use the insurance, but so why pay for it? And this becomes even more challenging when you have bad experiences in the community or something like that. So there is an automatic rejection. So even if you have a product that you are convinced that is going to help these people, it will help them, they will not take it on. They will not take it on because they know someone that had a bad experience, and that's it. So you need to make sure that they understand why it's important for them, how it will protect them if something happens, and that something might happen, and this will make the big difference in their lives. So that's the second point. And then you need to reach them as well, right? After you have successfully survived, let's say, these two steps, you need to go to the next one. Okay, you need to reach these people. And here, especially in the micro space, we've seen you need to be very creative and innovative. I think we will hear later of one of the examples of how reaching clients, how thinking outside the box is what is going to make a big difference in how you're going to reach the clients. So that's the next difficult challenge we need to go through. I don't know if anyone has watched the Squid Game. So it's this series where you finish a game, and then if you survive the game, because if you lose then you die or whatever, and then you go in. So this feels a bit like this, because every step, if you survive the first step, then you go to the next step, and then you have to survive the next step, and then each time you survive one of the steps, you get into a new dreadful challenge, right? It feels a bit like that, because every step in the value chain of this industry is basically a challenge. After you successfully completed these steps, you need to look at each part of the value chain. You need to manage registrations efficiently. You need to be sure that the policy renewals work. You need to make sure that premium collection works, and then you need to be sure that the claims management is efficient. And each of these steps need to be monitored very closely, and it needs to be efficient, because premiums need to be very low, so you don't have a lot of margin here to move, so everything has to be perfectly efficient, and then you have regulation on top of it that is looking at you and every step you're taking. So they're very careful with that, and so everything needs to be, you cannot make mistakes, right? Any mistake can be very, very costly, and especially in this low margin industry, it is a bit tough. So the only way to survive is you need to have scale. And how do you bring scale? Usually is with technology. You need to bring in the technology to somehow to help you with that. I'd like here to make a little emphasis on the importance of claims. Claims is probably the most important part of the puzzle. Claims are basically what insurers sell. The product of, if you have to point out of what an insurance product is, it's a claim. That's the only thing that's important here, it's claim. And especially with low-income communities where there is no, usually they don't have savings or any disposable income or access to credit lines. If something happens, they need to act immediately on it. Any coping mechanism has to be immediate. You need to pay funeral expenses, you need to pay medical bills, you need to repurchase products that you were selling or that were actually helping you in your productive cycle or in your business. And the speed in which this payment is made will make the entire difference. If you have to wait for 6 months for the insurance to pay you, you're back into the circle of poverty, which is actually what we're trying to break, or what we should all be working on to break. So basically, if you look at it, that this is kind of a overall perspective of what this industry is, and then that's why when you understand why traditional insurers usually don't like these clients. It is, as I said, very tough. It is a hard market, and you need to dedicate resources, or at least, you need to dedicate resources, but the most important resource is actually minds and creativity. You need to find a way to make it work that goes out of the traditional, from the traditional circle of what insurance is. And that's when we go back to the beginning, when I said that it should be treated separately. That's one of the main reasons why it should be treated separately. You cannot apply common insurance knowledge into this segment. But someone in the end needs to help this, promote this type of products, right? If the traditional business world or I don't know, how things happen normally, if nobody is there to push for that, it will not happen. And these people will continue to be unprotected. They will continue to have the same problems as they're having. And this is especially true in developing countries. Not everyone, well, most countries in the world don't have the privilege that we all here have to have a state that protects us. When we get sick, we usually can rely on the state to help us. When a hurricane, an earthquake, or something happens, normally we know that the state is gonna provide. This doesn't happen in developing countries, and this is even more true with the effects of climate change. And here I might say something a bit controversial, but if you see who is responsible for climate change, it's mostly industrialized countries, but the effects are mostly felt in developing countries, and most of all felt by, in the productive, let's say, space, by smallholder farmers. Smallholder farmers have been struggling with the effects of climate patterns for several years. They are not protected at all. So, I mean, we can continue a discussion later of who should pay for those premiums, who should be responsible for that. Is it the rich countries? Is it international organizations that should pay for it? Is it the private sector? Is it the beneficiaries themselves, local government? It doesn't really matter. The thing is, we need to find solutions that do protect them. And we need to find them now. So what we do need is to have pioneers that are innovative and are willing to take the new risks of getting into these markets, that people that do not shy away from this type of challenges. And although, as I said before, I don't know much about this industry, about the blockchain industry, I have the feeling that, that there is natural thing that goes together, because this industry is full of pioneers that do not shy away from challenges. I know that there have been a lot of, the entire industry has been struggling to get by and continue to move forward. So, I'd like just to quote a good friend of mine who is actually an expert on, he has a PhD on cryptocurrency and all that. And when he describes all of this as that the blockchain has the capacity of centralizing the marginal. So meaning that everyone who has been marginalized by the financial system could be brought in or incorporated into the system thanks to this technology. It just needs people to want to do it. It just needs all of us to work towards there and to try to share these values. But the big problem that I see from this industry is that it is not well understood. As I said, I don't know much about it, and that creates automatic rejection to it. So I'm sure some of you have felt that already. There is an automatic rejection to anything that's blockchain, that's crypto. Immediately people push it away. And they push it away because they don't know about it. And the only way to change that is by incorporating them into the processes. Trying to, make blockchain education is as important as financial education for inclusive insurance. You need to help people understand what blockchain is about, to take out this general idea that it is a black box that is operated by a group of technical people that know about it. just show that it's not. Show that it can be more open and that everyone should have access as long as you know how to deal with that. And so, yeah, just to end quickly, I would just like to say that that's why this forum is great, because it does bring exactly that. It tries to bring together this, blockchain expert, technical expert with other people that are working in the inclusive, social inclusion part of insurance. To, by bringing us together, we can try to learn from each other and see how to move forward and develop something. So yeah. So basically, yeah. As a concluding thing, it's just that it's like by working together, the only way to make this work is by working together, basically. So yeah. So basically, that's all I have to say. So if you have any questions, I'm happy to respond to anything.
Any questions?
Yeah, actually, I spent 6 years trying to solve that puzzle. I think there are also quite a number of players in the market who are actually doing that. When you're looking at decentralization, I think where that actually really comes in, because there's still also quite a few hurdles to decentralization. It's of course for parametric kind of insurance where it can help, but you could still do that centralized, where the real advantage would come in, and where you can also kind of dodge double regulation issue is when you create like community-based scheme with claims management being done through voting in the community, so that it's not insurance at all. And so some Kenyans here, they have like Harambe's and Chamas, try to create structure like that, decentralize that. Then you stay away from the regulation. That's kind of where decentralization makes sense.
Yeah, I see.
But
Yeah.
But for normal claims management, I mean, you still need to convert from crypto to normal, and when you get into normal business, you always get into regulation. When you get into regulation, things get tough.
Yeah, I think one of the key aspects of all of that is that the only way to make it work is if you have a lot of players working together to push together towards, that have common interests. Nobody can do it alone. So if you do this, like you have a great idea, if you don't have someone that is going to help you with the claims process, the claims part, or if you have someone with the distribution that takes care of that, it doesn't work. You cannot do it alone. And that's, I think, from all the successful schemes, that's what you can learn from them, that everyone has been working together, and including states and governments and regulators. In all the spaces where the regulator has been convinced that it works much better. Because you don't create an unnecessary enemy, basically. Because it is not necessary. Like, you're working for the same thing. It's to protect the people in the end. So by being open and transparent, and there is a potential of being completely open. That's when people trust each other more, especially all the partners that are working together in this type of schemes. Yeah, I would say. Yes.
You mentioned issues with like exclusions and that kind of thing, and lots of on like developing markets and that. But for example, in the US, if there's a hurricane or a flood, we often say, "Well, it's an act of God. We're not going to pay you a lot." There's all sorts of exclusions, which is what you were mentioning. To what extent do you think like a decentralized system or like decentralized data oracles could help with making things more transparent?
Well, normally with inclusive insurance contracts or agreements or whatever you want to call them, they should be very specific. So usually they are either for hurricanes or they are for drought. So in the decentralized scheme, when you have, it is easy to monitor if there is going to be a hurricane. There are ways to do it in a very objective way. You just use different tools that you have, and it's the same for droughts or if there are floods and this type of things. And this can all be linked, right? But for the product, it needs to be very clear. It needs to be clear for the smart contract or the way you do it, but it also has to be clear for the beneficiary. The beneficiary needs to understand that what he's protected from is from flood. He's not protected from fire, for example. Or maybe he's protected from fire, but it needs to be clear. What is not good, what cannot happen is to have, okay, you have home insurance, that's it. Okay, what does it mean to have home insurance? If there is a hurricane, does it protect? Oh no, if there's a hurricane, then maybe not. And if there is fire, oh, maybe fire not. So that's what you have to avoid in this type of contracts. And we know that, we all have contracts like this where we have like 3 pages of really small print that nobody reads. It's like you're trying to figure out how it works. You only read it when you have to make a claim, actually. You have to make a claim, it's like, okay, does it go in here? So that's when we talk about inclusive insurance, that's what cannot happen. You cannot have that section.
Okay, I think we need to end the session. Thank you very much again, Asier.
Okay. Okay, I think I need to wait there to take this off.